Inflation is meant to be controlled by, in the US, the Federal Reserve, in the UK, by the Bank of England. There's been this great belief in independent central banks. Do you think that experiment has worked and that the central banks have handled it well and that we should rely on them in the future?
No, there should be no independence in central banks. I mean, they are not elected by people. They are appointed by the president. Sequence of appointments, 14 years in the U.S. To be on the member of the Federal Reserve. The president is blamed for inflation. The president should be allowed to control the policy tools that control inflation if he's going to be held accountable for that. We wouldn't want to have an independent Defense Department not elected by the president, not controlled by it, or State Department or anything else. The Fed should not be independent, nor should the Bank of England. I can remember in the latter part of Thatcher's prime ministership, trying to peg the pound to the German mark and that was literally what caused the inflation when you had those huge tax cuts in Britain, which led to a huge surge in growth and output. By pegging the pound to the German mark, that's what led to the very sharp increase in British prices, pound prices. Now, that same thing would have happened in the US under Reagan, except for the fact that we allowed the dollar to float. We did not peg the dollar to the German mark or to any other currency. And therefore, the dollar appreciated by something like 85, 90% between 1978 and 1985. And that huge appreciation of the dollar kept us from having any inflation in the U.S. The same thing happened in Ireland when they went to the euro and when they got rid of the punt and put in the euro. And then the Irish tax cuts occurred, which also led to high inflation in Ireland. When you're going to have separate fiscal policy, you need to be in control of monetary policy to make sure that you don't peg it to foreign currency.